Hello everyone and welcome to today's lecture on one of the most crucial concepts in GST, the place of supply. I'm excited to take you through this fundamental topic that every GST practitioner must master. Today, we'll explore why determining the place of supply is so important, and we'll dive deep into the specific rules for both goods and services. So, let's get started. Before we begin, let me outline what we'll be covering in today's session. First, we'll understand the critical importance of determining the place of supply in GST. Then, we'll examine the detailed rules for determining the place of supply for goods, followed by comprehensive coverage of place of supply rules for services. By the end of this lecture, you'll have a complete understanding of how to correctly determine where your GST liability arises. Now you might wonder, why is determining the place of supply so important in GST? Well, there are several critical reasons. First, it determines the type of tax you'll pay. If your place of supply is within the same state as your business, you'll pay CGST and SGST or UTGST. This is called intra-state supply. But if the place of supply is in a different state, you'll pay IGST. This is interstate supply. Second, GST follows a destination-based taxation principle. This means tax is levied where goods or services are consumed, not where they are produced. The place of supply determines which state gets the tax revenue, ensuring fair distribution based on consumption patterns. The importance doesn't stop there. Proper determination of place of supply is crucial for compliance. Getting this wrong can lead to penalties, interest charges, and significant procedural delays. Moreover, it directly impacts your input tax credit claims. You can only claim ITC based on the correct classification of supply type and place. Incorrect classification might make you ineligible for ITC and create mismatches during audits. Trust me, you don't want to face these compliance nightmares. Let's look at the legal framework. Section 286 of the CGST Act 2017 defines place of supply and refers us to Chapter 5 of the IGST Act 2017. This chapter is comprehensive and covers different scenarios. Section 10 deals with place of supply of goods for domestic transactions. Section 11 covers import and export scenarios. Section 12 handles services where both supplier and recipient are in India, while Section 13 deals with cross-border service transactions. We also have special provisions in Section 14 for OIDAR services and Section 14A for specified actionable claims from outside India. Now let's dive into the specifics, starting with goods. Section 10 is your go-to section for domestic transactions involving goods. It's beautifully structured with different clauses covering various scenarios. Clause A covers supplies involving movement of goods, whether by supplier, recipient, or any other person. Clause B handles the interesting case of delivery on direction of a third party. Clause C deals with supplies without any movement. Let me explain these scenarios with practical examples. When goods move from supplier to recipient, the place of supply is simply where the movement terminates for delivery. But here's where it gets interesting. The third party scenario. Imagine you're selling goods to company A, but they ask you to deliver directly to company B. In this case, we treat it as if the third party, company A, received the goods first. So, the place of supply becomes company A's principal place of business. Then there's a second supply from company A to company B, which follows the normal movement rules. For supplies without movement, it's straightforward. The place of supply is where the goods are located when delivered. Now, clause CA has special rules for unregistered persons. We also have provisions for goods assembled on-site and on-board supplies. Here's a crucial point. Supplies to unregistered persons override the normal rules. The place of supply becomes the address recorded on your invoice. If there's no address, then it defaults to your location as the supplier. Remember, even just mentioning the state name counts as an address. For goods that need assembly or installation, the place of supply is where you actually assemble or install them, not where you manufacture or store them. And for onboard supplies, like selling goods on a train or aircraft, the place of supply is where the goods are taken on board. Now, let's move to services which have more complex rules. The general rule under Section 12 is beautifully simple. For registered recipients, the place of supply is the recipient's location. For unregistered recipients, if you have their address in your records, that's the place of supply. If not, it defaults to your location as the supplier. But services have many special categories with specific rules, and that's where it gets interesting. Services related to immovable property have special rules because property can't move. This includes services by architects, interior decorators, surveyors, and estate agents. It also covers lodging in hotels, guest houses, houseboats, and accommodation for events like marriages or business functions. The rule is logical. If the property or accommodation is in India, the place of supply is where the property is located. If it's outside India, the place of supply is the recipient's location, since both parties are in India. What happens when a property spans multiple states? Now, Rule 4 of IGST provide clear guidance. For hotels, you apportion based on nights stayed in each state. For other immovable property services, you use the area located in each state. For houseboats, it's based on time spent in each state's waters. These rules ensure fair tax distribution across jurisdictions. Some services are inherently location-based. Restaurant and catering services, personal grooming, fitness, beauty treatments, and health services are taxed where they're actually performed. This makes perfect sense. You can't get a haircut remotely. Training services have a twist. For registered persons, it's the recipient's location. For unregistered persons, it's where the training is actually conducted. Entertainment services follow the consumption principle. Admission to cultural, artistic, or sporting events, amusement parks, or entertainment venues are taxed where the event or venue is located. Event organization has nuanced rules. For registered recipients, it's their location. For unregistered recipients, if the event is in India, it's where the event is held. If outside India, it's the recipient's location. Transportation services have different rules for goods and passengers. For goods transportation, registered recipients follow the general rule. Recipient's location. For unregistered recipients, it's where goods are handed over for transportation. Passenger transportation is interesting. For registered persons, it's the recipient's location. For unregistered persons, it's the place of embarkation. If you're issuing tickets for future use without knowing the boarding point, you fall back to general rules. Services provided on board conveyances, like meals on flights or trains, are taxed at the first scheduled point of departure. Telecommunication services have detailed rules based on service type. Fixed lines and cables are taxed where installed. Postpaid connections use billing addresses, while prepaid services depend on where payment is received or vouchers are sold. For telecom services spanning multiple states, like leased circuits, you apportion based on contract terms or, if not specified, by the number of points in each state. The rules clearly define how to count circuit points, ensuring accurate apportionment. Banking and financial services, including stockbroking, follow a simple rule. If you have the recipient's address, that's the place of supply. If not, it's your location. Insurance services distinguish between registered and unregistered recipients, following the pattern we've seen before. Advertisement services to government bodies have special rules because advertisements often run across multiple states. The value is apportioned based on where the advertisement is actually broadcasted or displayed, regardless of where it originates from. Let me walk you through the specific apportionment methods under Rule 3 of IGST rules. Each type of advertisement has its own logical basis for distribution. For newspapers and publications, the apportionment is based on the amount payable for publishing advertisements in editions in each state or union territory. So if you pay Rs 50,000 for a Delhi edition and Rs 30,000 for a Mumbai edition, the tax gets distributed accordingly. For printed materials like pamphlets, leaflets, diaries, calendars, or t-shirts, the basis is the amount payable for distributing a specific number of such materials in each state. If you're distributing 10,000 pamphlets in Gujarat and 5,000 in Rajasthan, the tax apportionment follows this distribution pattern. Hoardings, excluding those on trains, are straightforward. The amount is apportioned based on the actual amounts payable for hoardings located in each state or union territory. For advertisements placed on trains, since trains move across multiple states, the apportionment is calculated based on the ratio of railway track length in each state or union territory. This is quite logical when you think about it. The longer the track in a state, the more exposure the advertisement gets there. For advertisements on utility bills, the apportionment is based on the amount payable for advertisements on bills pertaining to consumers having billing addresses in each state or union territory. So if you're advertising on electricity bills, it's based on where the bill recipients are located. Railway tickets follow a similar principle. The amount is apportioned based on the ratio of the number of railway stations in each state or union territory. For radio station advertisements, it's based on the amount payable to radio stations which, by virtue of their name, are part of a specific state or union territory. Cinema hall advertisements are apportioned based on the amount payable to cinema halls or screens in a multiplex in each state or union territory. This is quite straightforward. You pay based on which cinema halls are showing your advertisement. Now, for modern digital advertising, the rules get more sophisticated. Television channel advertisements are apportioned based on the viewership of the channel in each state or union territory. This makes perfect sense. States with higher viewership should get a proportionally higher share of the tax revenue. Internet advertisements are deemed to be provided all over India, and they are apportioned based on internet subscribers in each state or union territory. Similarly, SMS advertisements are apportioned based on telecom subscribers in each state or union territory. Let me explain the calculation framework for the three major digital advertising categories. For television channel advertisements, the basis is viewership figures from the Broadcast Audience Research Council or BARC. The data from the last week of a given quarter is used for the succeeding quarter. So Q3 2017 data would be used for Q4 2017 calculations. For internet advertisements, we use internet subscriber figures from TRAI. Here, the last quarter of a financial year is used for the succeeding year. So Q4 FY 2016 to 17 data would be used for FY 2017 to 18. For SMS advertisements, we use telecom subscriber figures from TRAI, with last quarter data being used for the succeeding quarter. When regional data spans multiple states or union territories, we apply population ratios based on the latest census to regional viewership or subscriber figures. The state-wise value is then calculated by multiplying the total advertisement value by the respective ratio for each state or union territory. And that concludes our comprehensive journey through GST place of supply rules. Today, we've covered the fundamental importance of place of supply determination, explored detailed rules for goods including movement scenarios, third-party deliveries, and special cases for unregistered persons. We've also mastered the complex world of service place of supply rules, from general principles to specific categories like immovable property, entertainment, transportation, telecommunications, and advertisement services. These rules might seem complex initially, but with practice, they become second nature. Keep practicing with real-world scenarios and don't hesitate to refer back to the specific sections and rules we've discussed today. Thank you for your attention, and I'll see you in the next lecture.